How's it going, everybody? Matt Diamond with Kalshi, and today we're talking strategy. This strategy is going to be how to trade breakouts on the S&P 500 and the NASDAQ 100 daily event contracts. Breakouts are the most common technical patterns, and really what they are is continuation to the upside, and especially in bull markets, that's when they're going to work best. And the past 5 months have been a very strong market, so that's why I think that going over this kind of strategy with the S&P 500 and the NASDAQ 100 is going to be a great thing. So now let's go over the definition of a breakout for those that don't know. Breakout trading, or a breakout, is used by active investors to take a position within a trend's early stages. Generally speaking, this strategy can be the starting point for major price moves and expansions in volatility, and when managed properly can offer limited downside risk. A breakout is a potential trading opportunity that occurs when an asset's price moves above a resistance level. And that's exactly what we're going to talk about today. So this is the S&P 500 daily chart, and we're just going to find some areas where there could be breaks above resistance, which would be the breakout. So let's go to the far left, that bottom left. Let's look at the range. Trying to keep this very simple because it's easy to overcomplicate, but we're going to find ranges and then breaks of those ranges, so it would be the breakout. Let's look at this area right here. Pretty big area of resistance. You know, the market was going sideways here for a little bit. Yes, it did dip below it, but essentially it got back above. And there was 1, 2, 3 areas where this kind of topped out. So that would be a major area of resistance. And then what we're trying to do is trade the break of that. Now, nothing works 100% of the time, but you can see right here, just keeping this example very simple, when it got through this area of resistance, it had a nice move to the upside and had a pretty decent breakout. Now let's go structure the trade. So we would go into the back end of Kalshi, go to the S&P 500 daily brackets, and we would look at the ranges that are right at or just above. Now, being that this breakout happened a while ago, these range numbers are going to be slightly different, but we'll still structure it like it would be the same way. So this range was right around 4,100 that it broke out of. So that would be the breakout at about 4,100. So what we would want to do is look at all the ranges on the S&P 500 daily bracket that are 4,100 and above. We wouldn't want to go too far above, but a few ranges that are above. And what we would want to do is trade the yes contracts, because if it does break above that resistance and has that bullish move to the upside, there is the likely probability that it closes in those upper ranges. Now let's go over another example. This one's going to look slightly different, which is good because it shows that not every single breakout is going to look exactly the same. It's all about some sort of sideways consolidation and then a break out of it and continuation of the uptrend. So looking at the daily chart, here's where I see a bit of a sideways consolidation, had that nice move higher, very clearly going sideways. And if you look at this 4,300 level, big area of resistance. So being that the trend has been to the upside, if it breaks above that 4,300, that could possibly be a breakout. And what do you know? In this example, it worked out well. And then to structure the trade, we would go into the back end of Kalshi, go to the S&P 500 daily bracket. And remember, these numbers are going to be slightly off because that breakout happened a while ago. But right around that 4,300 level, we would want to look at the ranges anywhere from 4,300 to about 4,400. Because if it does have that breakout and it gets through 4,300 and has that bullish move, we would want to trade the yes contracts in those upper ranges, because if it does have that follow through, there's the likelihood that it does close in those upper ranges. And then one last example on the S&P 500 daily. So we look at a major area of resistance right around this 4,500. As you can see, it was in a clear range going sideways. 4,500 went there a couple times, could not get through it. And then as it tests it again, so resistance can only remain resistance for so long. Eventually, it can break. And if it does, it can have a very nice move higher. What do you know? It got through that 4,500 and had a nice momentum breakout to the upside. And now to structure the trade. So at that level, 4,500, we believe there is going to be a breakout and continuation of uptrend. What we would want to do is look at the 4,500 to the 4,525, 4,525 to 4,550, and maybe even the one above that, 4,550 to 4,575, but we don't want to go too far out. And then we would trade the yes contracts on these upper ranges, because if it does have that follow through, that bullish move to the upside, there's the likely probability that it closes in those upper ranges. That was the S&P 500 daily chart. Now let's go look at the NASDAQ 100 daily chart and find some areas of sideways consolidation and then a breakout. Here's where I see a pretty clear one right here in a range right around that 14,000 level was an area of resistance. Eventually got through that resistance, continuation of the uptrend, and a nice breakout to the upside. Now to structure the trade, going onto the back end of Kalshi, looking at the NASDAQ 100 daily bracket. And remember, these ranges are going to be slightly off just because that breakout happened a while ago. But focusing on that 14,000 level. So if we were to break above that, we're going to want to focus on the first few ranges just above that, because if it does have the breakout, there's the likelihood that it's going to close in those upper ranges. So we would want to trade the yes contracts to the upside. Now another example, so at a really big move to the upside, here is another period of sideways consolidation. Right around that 14,600 level was a clear area of resistance. And then once it broke through that resistance, continuation of the uptrend, another breakout to the upside. And now structuring the trade, going into the NASDAQ 100 daily bracket, we would be looking at that 14,600 level, probably up to about that 14,800. So any of those ranges, we don't want to go too far out. And then what we would want to do is trade the yes contracts to the upside, because if it does have that upside follow through and it breaks out, there's the likely probability that it closes in those upper ranges. And now the last example on the NASDAQ 100, here is another area of sideways consolidation. And as you can see, this 15,500 was a pretty big area of resistance. And then once it got up to it here, it actually had some really nice follow through, continuation of the uptrend, cleared out that resistance, and had another nice breakout to the upside. And now to structure the trade, going into the NASDAQ 100 daily bracket, and that level was 15,500 that I mentioned, would probably want to go as high as maybe 15,600, but not too far out. And then what we would want to do is trade those yes contracts to the upside, because if it does actually break out and it has that bullish momentum follow through to the upside, there is a likely probability that it's going to close in those upper ranges. So those are some great examples on how to trade breakouts on the S&P 500 and the NASDAQ 100 using Kalshi daily event contracts. I appreciate you watching the video. Feel free to like, comment, and subscribe, and I'll see you in the next one.